Bum, 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 bum. Good afternoon, everyone. This is your favorite real estate mortgage broker in California. I hope you're all doing fabulous. Of course, we're living the quarantine life, and of course, that's just the nature of the life we live in these times, and we just gotta take it as it comes. So I want to wish you guys all well. I hope you're all doing great in the comfort of your own home. And today I really wanted to just come on and talk a little bit about the real estate mortgage state of the market, and especially how COVID-19, the coronavirus, is affecting real estate and mortgages and all that stuff. So we'll be talking a little bit about that, and then I'll have a little bit of a Q&A if you guys are interested in asking some questions. I'd love to help. I'd love to answer some of them if you have any, and if it's something that I can definitely answer, I'll definitely do that. So I hope you're all doing fabulous. You're all healthy. Just stay healthy. Stay indoors for the time being. This will pass. You got to follow with what's going on right now as far as, if the local government's telling you not to leave, don't leave. Just stay indoors. It's only a temporary thing. But the main thing is take a lot of vitamin C. Take your zinc lozenges. Those are important to keep your health and immunity up to speed, okay? Now, let's talk about the state of the market. State of the market and what's happening in mortgage and real estate. Well, yes, has this affected everything around us? Absolutely, it has. But we want to, as a consumer, we're looking at it as, okay, is this a temporary shift? Are we seeing something more long-term? Honestly, nobody has the answers right now to that. Nobody can say, okay, this is going to be more long-term or is this going to be short-term? My expectation is that it will be a short-term. It'll be more of a steep decline with a steep incline and a short-term. Usually in real estate, when there are those swings up and down, they usually come in like 10-year periods. Well, we've had a more than a 10-year run of inclines. And now we're seeing a little bit of, the whole economy going like this, and the stock market going like this, and real estate is like looking at it and saying, okay, what's going on here? Real estate hasn't really affected, the prices yet, although we may see a little bit of a change coming up. I'm not too sure. But the main thing is it going to be short-term or long-term? In my opinion, I think it's going to be short-term. I think we're just in a phase where this all caught us by a surprise. I think it's outside of what's happening in economics. It was more of a health issue, and it was more of a worldwide issue. So we're seeing things right now being affected outside of anything to do with the financial industry. It was all health related. So it's all new, and it's happening all at once, and it's happening fast. So of course, the volatility in the markets, it's going to go crazy. It's going to go nuts, okay? We just have to be mindful that we got to stay alert, see what's happening. Us as a mortgage company, we're looking really closely at, everything that's happening. Things are changing by the hour. Our investors are emailing us every hour. It almost feels like every hour, stating program changes. So there's a lot of programs that are changing. Hey, what's up, guys? I know some of you guys are waving. Frankie, how you doing? I hope you're doing well, man. Out in Chicago, that's my boy Frankie in Chicago. So there's a lot of program changes, and we got to kind of keep up to speed with them. But one thing I can say, all these program changes, all these suspensions that we're seeing with programs, like right now, for example, your jumbo programs are pretty much all gone. A lot of the jumbo investors have suspended their fundings, they've suspended their closings, they've suspended origination. Same thing with non-QM. Non-QM loans, like for example, non-QM meaning non-qualified mortgage. And what that means is these are more of like the old time where they used to call them stated, but they're not stated. It's not like your typical stated income. It's not that at all. It's more of outside the box type of loans. For example, you're qualified based on your bank statements for your business owners instead of your actual tax returns. So there's different things. There are maybe higher debt to income ratios than your normal agency programs. such as your FHA and your conventional Fannie and Freddie stuff. Okay, so that's non-QM. That has disappeared. Non-QM's disappeared off the market. Although I can tell you, our company, Loan Experts, we actually still have a couple of investors that are still doing non-QM loans. How long? I'm not too sure. And I also have a great portfolio investor that is actually still doing jumbo loans. So if you're a realtor out there or a referral partner out there, or even a buyer that's in the market that's looking to buy and you're looking at a jumbo loan or something, I still have those available, but it's all based on a case-by-case basis. It's a portfolio loan. What that means is the investor is willing to look outside the box on what's going on as far as your situation. For example, this particular investor has funded loans with us with somebody that has 1 year of self-employment instead of your typical 2 years of self-employment that's required on most any loan. So it's outside the box, and they're looking at jumbo loans as well. So if you have a jumbo loan scenario, drop me a message. We'll definitely talk about it. Give me a scenario. But I do have to tell you, they don't offer 30-year fixed. They do offer 5-year, 7-year, and 10-year fixed rates, which are still fabulous rates. I mean, I'm looking at rates between 3.5 to 3.75 on a 7-year fixed, which is awesome still. So with this particular investor, so definitely reach out to me if you have any of those jumbo deals out there that are in limbo or that kind of fell apart because your lender, is no longer doing them, which that's completely understandable. That's just the market we're in right now. But just reach out to me. We'll definitely try to help you out there. But as far as rates, yeah, so a lot of people are, I've got a list of clients that I'm waiting on rates. They're kind of standing still because rates have increased. And the thing is, I'll tell you a little bit about what's happening with rates. A lot of people out there think that the rates have mortgage rates have a lot to do with the Fed rate cuts. The Fed rates, they've cut almost to 0% now. They're between 0 and 0.25 basis points as far as their rates go. The Fed rate is not what really affects the mortgage rates. The Fed rate really affects the banking system and how they borrow from one another. Short-term loans between bank to bank. Those are Fed rates. That's the Fed rate that is affected when the bank is borrowing from another bank. What affects the mortgage rate is typically the 10-year Treasury, the 10-year Treasury yield bond, and what's called MBS, which stands for mortgage-backed securities. Okay, so when this whole coronavirus started, rates, a lot of the volatility in the market just went nuts on the stock market, right? So that affected the rates because the investors now we're looking at, okay, what's going on? The market is crashing. So now the mortgage rates are following now. They're taking swings. I mean, we were at one point getting rate swings in one day, like 5-6 times a day. And we still are. We still get rate swings in about 2 to 3 times notices from our investors that rates have changed. They've either gone up, they've gone lower, they've gone up, they're deteriorating, whatever the case may be. But that's normal of what's happening because of the coronavirus, okay? So what was happening is because these lenders that were in, back in early March, late February, rates were at 2.75. I had a 2.75 30-year fix that I locked a few loans on for 30-year, few of my clients. So that went from a 2.75, 3%, all of a sudden went up to a 4.5% in a matter of 2 to 3 weeks. That's a large, huge swing when it comes to interest rates. So that volatility in the stock market caused all that. So what's happening now, because there's such a big swing, these investors that purchase these mortgage-backed securities are no longer purchasing them. They're at a standstill. So what they're doing is they're stopping. They're saying, okay, we don't want these pull loans. And you know the reason why? Because they are still trying to understand what's happening in the market. And they're trying to gauge that, okay, 6 months down the road, this these rates are eventually going to come back down again, and they're going to come back down low. I mean, I'm getting word from on the market that rates are going to come back down low, back in the threes and maybe even lower. Okay, we don't know that exactly, but that's the forecast that we're seeing after this whole coronavirus stuff is all over with. So what they're doing is they're not buying these big pool of loans that are all 4.5%, 5% rates, because they know that the minute the rates go down, these same people are going to end up refinancing. So what they're doing is they're thinking, okay, we're going to buy these pools of loans that are all 4.5%, 5%, and we're going to lose these loans in about 6 months because people are going to refinance out of them. So that's why all these lenders out there, they're kind of stuck. They're not able to sell these loans to the investors, so they're not making these, as rates are increasing, these loans are just sitting there. So that is the reason why we're seeing such higher rates with a lot of these lenders, is because they're actually trying to maybe avoid even people getting that rate. So they're bumping the rates up a little bit because they know that they can't sell it on the secondary market. So with that being said, that's why you're seeing a great volatility in the rates, and that's why we're seeing higher rates. A lot of people are coming to me, hey, Ray, I know rates are low now. What can we do? Well, it's quite opposite. With all this coronavirus stuff, with the market volatility in the stock markets and the mortgage-backed securities and the 10-year treasury, I mean, it's all like, in Assyrian, we call it bushala. Bushala is a soup that we make as Assyrians in our culture that's full of all these different vegetables. Well, that's exactly what's going on here. This volatility has caused so many different things, mortgage-backed securities, 10-year treasury bonds, stock market, economy, all of these things to affect the rates. Whereas before, it was more of mortgage-backed securities and the 10-year treasury. It was more those two that, really affected rates. Now it's like a whole plethora of things that are. So that's why just stay cool, folks. Everything is going to be back to normal as soon as this kind of peaks and we get back to normal speed. And, happy Assyrian New Year, by the way, to all my Assyrian folks. It just passed 6,770 years of existence. I love you all. Anyway, back to mortgages. So that's what's happening with the state of the market, with rates and stuff. It's going to come back to normal. Just hang in there. But here's what I tell you. Here's what I tell all my clients. If you're in the market to refinance, call us. Let's get your application done. Let's get all your paperwork in. Because here's what's going to happen. Once these rates go back down, there's going to be a bottleneck in the industry. Because lenders are going to get so swamped and busy and slowly all getting back to work. Don't forget, they also have employees that they've either furloughed or they've let go or they're working from home. So it's not the normal scenario. Now, when this all comes back, we're going to get a bottleneck. And what's going to happen there, all these loans that everybody's trying to lock because of these lower rates, they're all going to get stuck there. Okay? So what I urge every one of my clients is, let's get the application going. We don't have to run the credit yet, but at least do the application, get me your documentation, get all of your documents in line, so that way once we know that the rates have gone down to where we want to lock, boom, we lock it and we submit the file right then and there. Okay? That way we beat that bottleneck. Even though we may still see delays and we may still see longer refinance times, but even if you're out there for purchases, same thing. Get your pre-approval done. Don't wait till the last minute if you're purchasing a home. Oh, well, I'm going to just wait until this whole coronavirus is done. Yeah, that's great. We know we can't show homes because it's all, we're pretty much quarantined most of the states. But you can do your contracts based on a contingency to actually inspect the property. So that's there. If you have a good agent that is going to show you virtually that home, definitely take the chance on it. If you see that's something you like it in the school district, you like it where it's located, take advantage of that. okay? And get your offers in and get into escrow. We'll get your loans, get that all ready to go. But you want to make sure that you're ready, because once the swing happens, we're getting into the summer season. It's going to be busy. It's going to be crazy. So I've got a question out there. It says, can you do loans here in Chicago? At this time, unfortunately, no, we cannot do loans in Chicago yet. Right now, we're licensed in California. So anywhere in California, wherever you are, we can definitely help you out with a loan. So now I'll leave it up to Q&A, but I do want to say one thing. Guys, stay away from getting bogged down into the negativity out there. Stay away from getting bogged down into the news. This isn't going to, all it's going to do is going to bog you down into more fear, because that's really what's happening out there. There's a lot of uncertainty, a lot of unknown about this, so they're creating a lot of fear. Just have faith in your Lord, have faith in God, have faith in yourself and your families. Take care of your families, be around them, take advantage of this time that we are around families. I know it could get frustrating with kids in the house, and I'm working from home, although my office is available still, but I still choose to work from home because I just don't want to go out there, and it's better because they're telling us to stay home. We'll stay home. That's fine. But just be mindful that we all are in this together, and we all are going to get through this together, and this too shall pass. So just hang in there, hang tight, stay motivated, stay focused on your business. If you're a business person out there, I know it's hard. Everybody is struggling financially. We're all struggling financially. It's hard, but there's now resources, especially with the stimulus package. There's some great SBA stuff that's going on out there, so talk to your SBA lender. There's actually an advance right now that they're giving through SBA for all business people too. You can get up to a $10,000 advance that's very similar to a grant where you don't even have to pay it back. So if you're a business company, business person, definitely take advantage of these options out there for you, and talk to your creditors, talk to your loan company for your cars, your lease, whoever it is. They are all working on pushing payments out, so that way you can kind of get a comfort for the next 2 months. But there are options out there for us all. Just hang in there, and we'll all get through this together, okay? So let's go ahead and anybody else have any questions? I'd love to answer them. Talk anything about real estate or mortgages. We'll go from there. So other than that, I really don't have much else. I just wanted to give you a good update on the market and what's going on with loans and with real estate. And hopefully everybody's doing well out there. So reach out to me. My direct line, you can call or text me, company 949-345-1319. Call or text me on that number. I'm available at any time. If you want to, even if it's something about personal, if you need help with something, feel free to reach out. I'm here for you guys. All right. To all my family and friends, again, to all the Assyrians out there, happy Assyrian New Year. It just passed 6,770 years and standing. Yes, this is the language of Assyrians, which is a language that Jesus spoke, which is Aramaic, ancient. So definitely I want to shout out to all you my Assyrian family and friends. Happy Assyrian New Year. To everybody else, I'm wishing you great health and wealth out there. Stay safe with your family. Enjoy this time together with your family. And hopefully I'll catch you next time on my live session. But in the meantime, if you have any questions, feel free to reach out. All right? Thanks a lot, folks. Take care. Have a wonderful day.